Hi, welcome to the Lifetime Capital Gains Exemption video series. My name is John McElroy. I'll be walking you through the presentation today. This is video 2B, the second half of our number 2 video, where we're taking a look at the tests that you need to pass to be able to eligible for your capital gains exemption. Now we're looking at the 24-month holding period tests. And just a reminder as we get started that you need to pass these tests every single day of the entire 24-month holding period. We're looking at checkbox number 4, and we're trying to get a check mark in that checkbox. And to do it, we have to pass the 24-month holding period ownership test. Now, the ownership of the shares can be limited to 3 possibilities and stay on side of the rules. The first one, again, the one that most people I'm sure fall under that are watching this video, it's very simple. If the shares are owned directly by you, yeah, you're good. You have to own them for the whole 24-month holding period, and if you do, without any problems, you're going to pass the ownership test. That's a no-brainer. However, there are a couple of other situations where we can also pass the test. And the first one we also addressed at the time of sale, which said that if the shares were owned indirectly by you through a partnership, you're a partner in a partnership, and the partnership owns the qualified small business corporation shares, we're also going to be fine as long as the partnership holds them for the whole 24-month holding period. That's another way to pass the ownership test. Own them directly, own them through the partnership, hold them for 24 months, you're in good shape. Number 3, the tax rules say that the shares can be owned by a person related to you. Okay, that's kind of interesting. So you don't have to own the shares yourself for the entire 24-month holding period, as long as they were owned by a person related to you. Now, a person does have an individual in a corporation context. We're looking at it from an individual perspective here. If shares can be owned by people related to you, well, who exactly is related to you for tax purposes? And we can take a look at an analysis. Basically, people related to you can be related by blood, by marriage, by adoption, or by common law. I'm only going to take a look at the 2 big ones, blood and marriage. How are people related to you by blood under tax rules? Well, if we put you in the middle, we can take a look at the people related to you. Your parents and your children, of course, are related, as is your brother and your sister. Your grandparents and your grandchildren are related, up and down the line, great-grandparents and great-grandchildren. Right, all related to you by blood. What about aunts and uncles and cousins and nieces and nephews? Are they related to you by blood under tax rules? The answer is no, they're not. Okay, so keep that in mind. If we're talking about shares being owned by a related party, that related party can't be an aunt or an uncle or a niece or a cousin or a nephew. Now here's one that's kind of interesting. Yeah, it makes sense that your brother is related to you by blood, but under tax rules, your brother's spouse is also related to you. And your sister's spouse is also related to you by blood. That's important to keep in mind because we're going to apply a similar analysis when we take a look at being related by marriage. These can be confusing, but the easiest way to understand it in my mind is just to think that people related to you by marriage are people who are blood relations of your spouse. It's just that simple. So now we're going to put the spouse in the middle, but we are still talking about people related to you. So people related to you by marriage are people who are blood relations of your spouse. Your spouse's parents and children, brothers and sisters, all related to you by marriage. Grandparents and grandchildren and great-grandparents and great-grandchildren. Now your brother of your spouse is related to you, but so is your spouse's brother's spouse related to you under tax rules by marriage. That seems a bit convoluted. Our aunts and uncles aren't related to us, but our spouse's brother's spouse is related to us in the same way that our spouse's sister's spouse is also related to us by marriage under tax rules. You could also be related by adoption and common law. I won't get into those too much, really not at all in this video series. So what about the ownership test for the 24-month holding period? Well, you don't have to own the shares for the entire holding period. The rules just say that the shares can't be owned by anybody except you, a partnership related to you, or a person related to you. And if one of those 3 apply, that's what's required to get a checkbox in number 4, passing the ownership test for the 24-month holding period. Let's go on to number 5. Number 5 is the control test for the 24-month holding period, for the entire 24-month holding period. Well, we've seen this before. The corporation must be a CCPC for the entire 24 months. It's the same test as the time of sale. So I won't cover it again. We covered it in the last video. But in summary, it says as long as the corporation is not controlled by public corporations, by non-residents, or by some combination of both, we're fine, we're on side, we're going to get a check mark in that fifth checkbox for the 24-month holding period. All right, very simple. What about the asset tests for the 24-month holding period? How do we get a check mark in checkbox number 6? Let's take a look at the asset test for the 24-month holding period. Now, to do that, let's just kind of recall what the asset test was at the time of sale. And this language should be familiar if you watched the last video. All or substantially all of the fair market value of the assets are used principally in an active business carried on primarily in Canada. Now remember, I'm only paraphrasing the Income Tax Act. When I put it in quotation marks, I'm quoting myself, not the Act. Only one major change compared to the time of sale test, and that is we take out the phrase all or substantially all, and we substitute in a new phrase to pass the 24-month holding period test. And the new phrase is more than 50%. So 90% at the time of sale, but for the 2 years preceding that, as long as more than 50% of the fair market value of the assets are used principally in an active business, carried on primarily in Canada, you're going to be okay. You're going to pass the 24-month holding period. All right, so let's take a look at it in chart form. For the fair market value of the assets used in the active business, it has to be 90% at the time of sale, but only greater than 50% during the holding period. Now, if you're contemplating a transaction, as a bit of a side note, we can prepare the company to meet the 90% test at the time of sale. It's a point in time, and we can prepare for that point in time and strip out bad assets, etc. Much more difficult to think about preparing for a 24-month holding period. So you really have to have a clear idea on how the rules work and have a strategy in place to make sure that on an ongoing basis that you're passing that test, because you never know when you're going to get an offer to buy those shares. So as long as the fair market value of the assets used in the active business are greater than 50% for the 24-month holding period, we're going to get that last check mark. And that's how we check all 6 boxes. And if you do, you're going to qualify for the Lifetime Capital Gains Exemption. It seems kind of complicated, but hopefully if you go through it once or twice, they'll become clear in your mind. And we're going to give you some strategies to help keep yourself on side and to come up with some optimal structures in the videos that are still to come in this video series. I am John McElroy. My number is 905-267-1043. I'd love to hear from you. If you like this video, click the like button. Love to hear your comments. Give me a call. I'd really appreciate it. I hope you're enjoying the videos. Meanwhile, I will see you in the next video.